Um, Shiliang, you're kind of obviously much more involved on the asset management side of things. When you take a step back and look from, say, a macro perspective, do you think that there have been changes in the macro environment which have kind of helped spur, the adoption and development of on-chain RWAs, whether it's interest rate environment? Is there anything that kind of you can think of which is kind of helping to drive this kind of adoption?
Yeah, I would say two folds in terms of my interest, right? One was kind of obviously like a lot of the interest from the asset management and trading side exploded during like DeFi summer like 1.0 in 2020, right? I think like that kind of spurred like the thinking of like, well, there's a ton of money to be made, like yield's extremely high, but it's like inflationary tokens that are driving the yield. Like how can we find in the longer term like sustainable yields, right? And so that kind of like will spur my original interest, and I started to dig a little deeper, and I invested and worked with various projects like Goldfinch back then to find like more like real world yields that weren't necessarily like inflationary and could kind of like stand the test of time like over a longer period, right? As like we kind of weaned off like the COVID like monetary easing environments and rates started to get hiked higher in end of 2021 2022. I think that spurred a lot of interest in terms of like, well, crypto prices were kind of collapsing, which resulted in these like inflationary yields also collapsing. And so we kind of saw this like vicious cycle of just collapsing yields in DeFi, but real world yields were rising, right? And so I think that drove a lot of the interest in terms of like, well, how do we bring this yield now that's higher than the native kind of like on-chain yields to on-chain, right? And so that kind of like spurred our interest to look even more at some of these various like projects and protocols. And for us, right, I think it's just kind of chasing like it's a cost of capital question, and that drives like all of our decisions, right? And so there were long periods throughout 2022 and 2023 where it just made sense to park our capital in real world like assets and you get exposed to the yields there as opposed to like on chain narratives and yields, right? And so I think that's kind of our like evolution.
Yeah. Okay. That's a very interesting point, Shiliang, you made. And I think at Hashnote we started to see the integration of RWAs into multiple different trading strategies across the space and across DeFi. One of the most interesting developments of recent year is the idea of integrating an ERC20 token that is interest bearing into these DeFi protocols. And by integrating not just money market tokens such as USYC, Hashnote's RWA token, we're also starting to see a much more robust level of sophistication that can be implemented in the DeFi space and the investment space in liquid strategies that you cannot have traditionally seen in the traditional financial system. I think that is that level of increasing, value, and value for what you're getting is something that we're trying to leverage in the space at large.
Yeah. So in terms of kind of having a interest-bearing kind of primitive asset, which is kind of a composable piece of kind of a very liquid DeFi trading strategy, is that kind of what you're saying, Gabe?
Well, it's not just but it's also composability and being able to leverage other protocols with RWAs to increase the value delivered by these RWAs for the specific investment strategy that's being implemented.